Hello folks, it's Sunday night, the 19th of January in the UK. This is a chart of the S&P 500. As you can see, we've been it's grinding its way higher. There were a couple of patterns here, if you remember, we've been looking at, but they've long failed. The butterfly, I mean, that leg's, it still is a butterfly. That leg's absolutely extended too far. But you can see now we've got this ABCD from the low we made back end of 2018. That comes in just about 20-30 points from where we are now. And all I've done here is just look at this. These are the last corrections that we did. The last correction we had of any note with that one and that one's about equal. So just over 200 points, these two swings. If we were to start down, that's the sort of move you'd probably expect initially. That would take down to 382 off this low down here, this point C, which would equal these two drops. So your 5-point expanding reverse wave, that's still a valid pattern. And if we come down and have a look at this on the daily, there's some interesting. I've got an indicator in here. I don't use indicators very often, but this is one I do look at. It's actually one of the guests that occasionally comes on Larry's radio show, Hema Reddy. She does a lot of work. She's come on as a guest on Larry's show, and she uses the RSI indicator. And she does a lot of work. She's done a lot of studying on WD GAN's work and everything like that. But what we've got on here, you see these little blue arrows that I've put on. Just to switch that down a bit. This was an ABCD pattern that completed just before we had that big sell-off in back end of 2018. You see this beautiful ABCD right into here. And if you notice where the two arrows are, your indicator made a high and price made a high right there, as you can see. And then backed off. And then we completed this ABCD pattern when the market went slightly higher. Look where the indicator was. The indicator made a lower high. That's what we call bearish divergence. And then you can see it hung about for probably a fortnight or so before it started to pick up some momentum to the downside. And that was quite a sizable correction. And of course, since then, it's been uphill all the way for the last year, 13 months or so. But you can see very similar things happened here now. We've got these two ABCD patterns very close to completing. What this one, this has just extended the CD leg by quite exactly twice. This CD leg is twice this AB leg on this smaller one. And again, you see where we made the high up here. The indicator made the high, then we've backed off, then we've gone to a new high on price, and we've got this divergence similar to what we had over here before the market started lower. So keep an eye on that. You see the patterns completed. I only use it for divergence. Divergence and what we call convert, because it works both ways. You've got the indicator making a lower high, price making a higher high. If you look at this sell-off here, we had the market made a low, the indicator made a low, we had a rally. The market came down and made a higher low, as you can see, that's a higher low than that low. Look at indicator. The indicator made a lower low. That is also bullish when you see it at the lows. If you saw it at the highs, it would be bearish, of course. So that works both ways. The indicator made a lower low than your price. That is also what we call, some people call that convergence as opposed to divergence. It's basically the same thing. You've got a discrepancy between your indicator and your price. That's all it is. So it can work both ways. So price could have come down and made a lower low. The indicator made a higher low. That is just the same. From a trading perspective, that's the same. You see that's probably a 786 retracement. So and rest history is just powered on higher, hasn't it? So that's what I'm seeing in the S&P. If we come down the time frame, just have a look at what happened on Friday. Let's have a look at a 15-minute chart for a second. This is Friday's sort of price action. This was the close, then we had this candle after the close. But we completed with a butterfly pattern. a beautiful A, B, C, D, and then this little 5-point expanding reverse wave as well coming in right there. So we know we're at the 1.618 on the weekly. Obviously the markets are closed tomorrow in the US, so I don't know if the futures are trading. The futures might be open. We'll have to keep an eye on it and see. But so that's the S&P. So if you want a quick look at the DAX, we can have a look at the DAX. The DAX just took off to the upside after the close. That's 15-minute chart of the DAX on Friday, and that sort of that was the 2100 candle on Friday, and then so look what we're seeing. Well, that 3 drives pattern is still valid on the daily chart. You've got your ABCDs, your 1.618. That's coming in. We've also got a little bit of divergence on the daily chart here as well. That we're high over here, and now so that's interesting. If we look at the weekly, I think I've got the weekly up as well. So there could be that, like I said, we've been watching that push up to 13,600. That could just maybe push up one more time. But we are at the double top. Whether it's going to back off a little bit first, or power in higher, or what, we'll have to wait and see. But so that's the DAX. The FTSE look quite strong as well. Quick look at that. Again, yeah, the FTSE testing these highs over here. So that's completed this. This is the long-term FTSE weekly chart, which is going back to the 2000.com bubble. You can see that beautiful butterfly completed. We backed off, and now it looks like it's wanting to come up and try and test these highs again, doesn't it? If it does fail somewhere around here, there is this possible ABCD correction. It's a perfect ABCD from the 2011 low, the one in black. That's come in. So certainly with these, you don't have to risk very much to see if you're right, but at the moment they're still going higher. So wait for price to confirm that, like it just might have done on the S&P. Just that may have confirmed on the shorter time frame. You ain't got to risk very much. You know, any move back above that, you know. So all we've done really is make a double top. If you look at this, that was the high. All we've done is spike the. So anybody that got short on this little swing down, right, had the stops up here. Markets come back, taking all the stops out, and then stop. Markets love doing that. They love doing that. So that's why we always protect ourselves. Okay, so that's what we're seeing in the stock markets for Monday. So take care, and like I say, the US markets are closed, but I think Europe and everywhere is open. So keep a close eye on these things. I think we're getting close to some sort of a reversal. How big, I don't know, but I think we're getting close. So take care, folks, and good luck with your trading.